Welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Agostino Pintus. Agostino is a former Inc. 500 technology executive turned commercial real estate investor. He has helped thousands diversify into real estate. He has syndicated multifamily acquisitions, development, and real estate funds totaling more than $350 million. Agostino is the founder and CEO of Bulletproof Cashflow, where he applies nearly 2 decades of real estate experience to source, negotiate, and acquire commercial properties. He is a sought-after speaker for real estate events, meetups, and media engagements all around the world. So, Agostino, welcome to the show.
Hey, man, thanks for inviting me. Greatly appreciate it.
Yeah. So tell us about, we were talking a little bit earlier as well about kind of like your background was like a technology executive in 500, Inc. 500 company. And, you kind of realize you had a special term that you used to describe kind of like your dilemma or your situation as a technology executive.
Yeah, I just can't keep a job. That's part of the problem right there, right? Well, so yeah, I was a former C-level executive, mainly in technology for many, many, many different companies, large Inc. 500 companies, public companies, private companies, that sort of thing. And I think the thing is, though, if anybody out there is in IT, you know that the typical lifespan of any IT person is usually 2 years, right? If you last past 2, that's actually amazing, right? Unless you're with some big company and you're somewhere in the hierarchy somewhere where you're hidden. But for the most part, it's usually 2 years. But that cycle really wears out on you. When I was a kid, I wanted to be this IT technology kid, right? Didn't really understand the whole world of IT because back then it was still somewhat growing. But, it was one of those things that my parents always told me, even though I was a kid that wanted to be an entrepreneur, no, don't be an entrepreneur, go to school, get good grades. Yeah. And just go work.
It's kind of a bad word in those days.
Yeah. To be an entrepreneur was considered high risk. And the thing is, though, and we were talking about this in the green room, it's like the highest risk thing you could possibly do is put your life and the life of your family in the hands of someone who hates you or doesn't care about you. Yeah. Why would you do that, right? It seems, when you say it out loud, it seems kind of crazy, right? But that's what I was doing, and I'm sure thousands, millions of people do the same thing every single day. They hate their jobs, they want to do something new, and yet they put themselves through that hell. And the one thing I can tell you, Eric, is that I wasted a lot of time by not fulfilling and not going after chasing that dream and making it reality. I didn't do it. I should have done it sooner.
Yeah. And your term was about 40, 40, 40. What does that mean?
Yes, the 40, 40, 40 plan. My parents told me about the 40, 40, 40 plan. It's amazing. It's an amazing program. Okay.
I'm buying into it.
Great. You spend 40 years, working 40 hours a week. And then at the end of it, you get 40% of your money because the government stole 60% of it, right? That's the 40, 40, 40 plan. Guys, it does not
Sign up
work.
now. Click the link below to join the 40, 40, 40 program.
Oh my God, it's terrible. But that's what it's become, right? I'm sure that there was a time in American history when it made sense to go devote your entire life to one company, and at the end of it, they give you a gold Rolex or something, and there's a big party, and then everybody goes home, and you go home and die or something.
Yeah.
No. Those days are gone, long gone. We haven't had those times in a very long time. Yeah. And, if someone really wants to experience true financial freedom, sure, you can go do big deals. You can syndicate. You can do all that stuff. Or, you know what? You can even start small as long as you start. With duplex, fourplex. Fine. Yeah. Just do something. Take some sort of action. I think it's absolutely critical these days. You have to. There's no choice.
Yeah. I mean, it kind of makes sense. A lot of my parents, stuff like that, boomers, and then it kind of makes sense for them. They work 40 hours for 40, many, many years for the company, 25, 30 years. They got the Rolex watch, but they also had a defined benefit pension plan. Like, they were taken care of. I mean, at the end, my father got like 50% of his salary, of his the last salary, covered by the defined benefit pension plan. And then you had another component from Social Security that was covering another 25%. And then you only had to come up with a little bit more to get to the same level that he was. And it was indexed with inflation. We don't have that anymore. People are not working at the same company for 25 years. Nobody's doing that, or very few. And you don't have, nobody has a defined benefit pension plan. I mean, you speak at different events, and I also do. And then, I ask the question, say, how many people know about a defined benefit pension plan? Nobody knows about it. It's been completely erased from social memory. Nobody knows about this anymore. But that's now we're all in the 401k, and we think this is so great that my employer is matching up to $5,000 a year or $10,000 a year in my 401k contribution. This is absolute, this is not the way to go.
Yeah, it's ridiculous. And here's the thing, though. I think the 2008 crisis really, I guess, put a sword in the heart of any type of pension, because it was the big auto companies that had those huge pension plans. Right? They were so big and bloated. It's no wonder that they failed. So there might be some companies out there that have such a thing. Maybe some of the old guard companies, so to speak, right?
Well, normally, governments and union companies that have large unions. These are the people that normally have that.
Yeah, big bloated systems that you and I get to pay for when we use those services, whether we like it or not, i.e. government, right? Like we don't have a choice. We're sort of stuck with it, right? And it's very scary times. But I think what's even scarier now is the fact that the dollar's getting so devalued. It's getting so devalued that it's not going to, it's the buying power of that dollar today is not even close to the same as it was even 5 years ago. Right. It's for anybody listening right now, you have to take what you have right now and get into the real estate game. You have to put into an asset that appreciates and doesn't lose money, like computers, electronics, all that stuff. Keep it, make it last a little longer. Put all your money into real estate. There's a reason why BlackRock and Blackstone and all these guys buy up single family homes by the thousands, because there's nothing else left to buy. That's why they're doing it. That's why they're doing it, right?
Well, they know this is going to be the game in the future. Is going to be the single family rentals. Definitely.
Well, because we're becoming a renter nation. Rents continue to increase as prices of housing continues to increase too. But salaries largely remain flat. And the World Economic Forum, not that I'm trying to be some conspiracy theorist here, but anybody can look this up. Everything is going to be subscription based, including where you live, and you're going to own nothing, and you'll be happy by 2030. There's tweets about it. You can look it up right now. It's all there.
Honestly, with the gig economy, like even the employees are going to be subscription. From the corporation perspective,
everything is. So it's like
nothing is going to be permanent. It's all going to be very fluid relationship that we're going to end up. Absolutely.
But the solution is to acquire the real estate yourself. While you still can, while you still can. There's always a deal out there. There's always a deal. There's various ways of putting a deal together. You just have to know how to do it, where to do it, and how to run the deal after you buy it. It's but that's why I really do urge a lot of people to get into a deal, whether they buy it themselves, join a partnership, and get in on that way. You just got to get in. You got to start.
And also you have to think about the 401k. I mean, your 401k, or even if you have a defined benefit pension plan with your government, with GM and whatnot, they invest your money, your retirement money, in the stock market. And I don't know if you watch what happened in the stock market and what's going to continue to happen, but it's not going up very quickly. It's going down. So these companies are going to be, or these pension plans are going to be insolvent, and they're going to have a hard time paying for the benefits that they claim that they would be able to pay. So that's going to be a double-edged sword.
Eric, I don't understand the whole stock thing. Honest to God, I don't get it. It's the S&P 500. If you had invested in the S&P 500 over the course of the last 5 years, your total return would have been 5.2%. If you would have done the same money in a real estate deal, even if it's your own deal, your own multifamily deal, would have increased by 15.8%. Literally 5 times or 3 times more than if you put it in the stock market without driving yourself crazy staring at the screen every day. It's a no-brainer.
And that's just the return. I mean, you're not even including the tax advantages that you get with real estate. You're not in, there's all these things too that you have. It's like,
and if you live there, you even get free rent too, right? So I don't get it. I think a lot of the The whole system in terms of going to work, doing the 40-40-40 plan, the whole school scenario, all that, even buying into the stock market. I was one of those guys that did the same thing, and it's like, it's a sham.
Yeah.
Really, it is. It is. Listen, and I'm not trying to say that all jobs are a sham. I'm not saying that. If someone's happy doing what they do, all the power to you. Great. Mazel tov. Have fun, right? It's okay. The thing is that if you don't have another plan here sitting off to the side, making money, making passive income where you have complete control over it in case something does happen, and it probably will happen, right? 2008 happened. You got banks collapsing all last week. Could happen again. I'm not saying it will, but you don't know. It's like, it's a responsible thing to do. It really is.
Absolutely. I mean, what we're talking about, investing in real estate, investing in cash flowing real estate rentals, is that, yes, you're building passive income, you're building appreciation, you're building wealth. It doesn't mean that you have to quit your job. If you enjoy your job, you want to continue doing it, go ahead. But eventually, we're all going to get to a point where we're going to want to have financial independence. We're going to want to have passive incomes, because we all want to retire at one point. We all want to travel some more, spend more time with friends and family. And, as we're heading more into a gig economy and all that kind of stuff, you're going to want to have passive income in order to kind of fill in those gaps and then these peaks and valleys as well.
100%. It really is a smart thing to do right now. It really is. I think one of the regrets I have is not starting soon enough.
So Agostino, one of the things that that's a little bit unique about your what you're doing and what you're telling people what to do is around kind of like the net lease, I believe. So, and my question is kind of like, how do you build sustainable passive income with net lease? How does that work? How do you make that work so that you have passive income?
Sure. So I'll give you the background first about the other two businesses, because it's relevant.
Okay.
So we started the business 5 years ago. I restarted the business 5 years ago, I should say, in the multifamily space, right? I was doing a lot of other real estate prior to that, but then really started making multifamily the focus. So I started buying a lot of big multifamily, got to about 1,600 units. At the same time, we also started doing development. My partners and I started doing development, and we're doing ground up or office rehab, right? Office adaptive reuse type of projects too. Class A, mostly type of assets. But here's the thing. I knew that there was going to be an economic slowdown at some point. This is going back almost 2 years. I knew it was going to happen. I didn't know when, I didn't know how, but I knew it was going to happen. At that point, I think we've been a 10-year bull run. That's the longest bull run ever. So it's kind of like, okay.
The money printing machine too. Like it was like a lot of people knew that, high inflation would be coming, and
100%.
we would know how the Fed would respond and how the economy would respond.
Exactly. So that's why I shifted the attention to this net lease, single tenant net lease specifically, right? So when you look at a single tenant net lease, I'm talking about Dollar General, Dollar Tree, Walgreens, CVS, Advanced Auto Parts, VCA, the veterinary clinics, DaVita, all these different types of companies that are corporate backed by multi-billion-dollar companies that guarantee the lease. Those are the types of deals that we're doing, right? So it isn't just like buying a space somewhere or buying a warehouse in the middle of nowhere. We're not doing stuff like that. We're buying corporate backed assets. So what we did was we set up a fund so we can buy maybe 10 to 12 to 15, depending on the raise for that fund, right? It's a blind pool. We tell our investors, here's what we're going to do. Here's the return projections we're going to hit. And the cool thing about these types of assets is that they're extremely predictable, because everything's driven by the lease. If you review the lease, you see what the rents are going to be. You plug it into your model. You know what the debt's going to be because it's locked in too. Extremely predictable. So it's so predictable that we even do monthly returns. That's the cool thing about it.
That's nice.
So, and I knew back 2 years ago that there's going to be a need for this type of product one day, and that one day is here, right? It is here, right? I mean, certainly multifamily is good and development's fine too, but right now with the net lease assets, that stuff produces no matter what happens in the economy. It doesn't matter. Like if we had another COVID, it won't matter. that still keeps rocking and rolling.
Yeah.
You know, you always have some static around multifamily because, you know, collections tend to slow down a little bit, and that's expected, right? But when it comes to the net lease, it just keeps on going. You know, that's the great thing about it. And you know what? If Dollar General decides I'm leaving, well, you have to pay the rent still. It doesn't matter, right? So that's the cool thing about it. And then you re-tenant the asset. Part of it is you have to underwrite the deal. That's the key thing, is underwriting the asset to make sure that what you're buying is a good deal with a lot of traffic, a lot of people going in and out of that place, and it's successful, a successful store, because there are a lot of duds out there, and the key is trying to figure out where the duds are. That's the hardest thing, you know.
Yeah. And then the other thing too about the net lease is that, you know, the Dollar General, your tenant, is responsible for the maintenance, and they're responsible also for the property taxes and all of that. So these increases.
Believe it or not, Eric, it depends.
Oh, it depends. Okay.
Yeah. Well, here's the thing, right? For the longest time, well, brokers will often refer to everything as a triple net lease, triple net. Everything's triple net, triple net, triple net. No, 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 no. It is not.
Okay.
It's not true, right? What's true is what's in the lease. The guy will say triple net, but if you look at the lease and say, well, it's everything but the roof, or it's everything but the asphalt, or it's everything but this.
Yeah, they do have some some exceptions. I think the roof is one of them, and I think there was also potentially some mechanicals as well, like HVAC on some leases. But you can negotiate. You can basically negotiate whatever you want if you're Dollar General, right?
No, not always. No. So when the assets that we're buying right now they already have the lease. So when we buy an asset, we buy the property, we buy the building, we buy the land, we buy the lease, we buy the whole kit and caboodle. We buy it all, right? The lease is already in place. We can't really negotiate the lease, right? So it's one thing that if like say again, the broker will call it triple net until you really dig in and see what the nets are, right? Because it's not really, it might actually be a double net, or hell, it might even be a single net lease. You don't know until you read the lease. But I mean, I've looked at triple net leases where the tenant will cover everything. And I go look at the property, and clearly the building had not been maintained. The asphalt was all busted up. The brick was all like had the stair step because all the concrete was coming out of it. You know what I'm talking about. It was a complete mess. You know, so clearly either they're not sticking around or they're not maintaining the asset because they don't care about it, right? So why would I want to buy that asset and hang on to it for 2 years or 3 years or 5 years or whatever? If they're not going to maintain it, then I don't want it, right? So we passed on that deal. We'll pass on deals like that, even though the neighborhood is strong. It's got good vehicles, vehicle traffic. You know, all that's fine. But if the asset's not in good shape, we don't buy it. You know, but again, it just largely depends. That's why you have to really know how to access the data, where to look for the data, and how to underwrite the deal. What we did is, because my background is tech, my wife's background is tech too, we built out special types of technology that helps us go out, pull in all the assets that are available for sale. We are able to organize them, place them on a map, and figure out what assets are for sale at a view. We pull this data every single day. It's pretty cool. Yeah, it's all proprietary that we built.
Oh, wow. Yeah. So it's not even just looking at LoopNet. It's just looking where do you get the data?
Well, we get it from a lot of public sources. You know, we do, right? You know, this is LoopNet is still, it's just like everything else. It's a good place to find brokers. You know, really the deals that we largely get, though, for the most part, are off market. You know, direct from a broker, usually.
Oh, okay.
Right? But here's the thing, you know, as we start scanning for data and we start building a database of all of the stores or all the locations that were up for sale in a certain location, we built this massive data store. We're now able to understand and know what does a cost per square foot for a certain building of a certain size go for in a certain area, right? We're mining all that data right now, you know, so.
Yeah, exactly. I mean, the more you know about it, and this is the thing too. I mean, when you look at the residential space, there's a lot of data out there. It's easily accessible and you can easily figure out. I mean, unfortunately, it's on comparable sales, but at least the data is there. You know that this building is this, you know, or the rent is in this area is this much based on the square footage, the number of bedroom, you know, the area, the school, blah, blah, blah. but everybody is so much more secretive on the commercial side. I mean, this data, if you're asking people, hey, what should be the the cap rate for this particular property in this neighborhood and stuff like that, I said, well, nobody can really tell you. Your broker might be able to give you some hints, but there's really, unless you, like what you're doing is kind of like capturing all the data and figuring out what's going on in your market. People are going to lack some data to really figure out what the value of that building is, right?
Yeah, well, there's that, but I think our approach is a little different though, because
Okay.
it's gonna sound crazy. Some brokers, just like you said, they'll just price it for the sake of pricing it.
Yeah.
They're just, that. I mean, if any brokers listening, tell me I'm wrong. All right,
Yeah.
go ahead and tell me I'm wrong. I'm not wrong. Right. The thing is though, is that we don't value it that way though. Right. We value it as like, okay, if the deal is somewhat in the neighborhood, we'll plug it into our model. And what does the price need to be in order for us to hit the return targets that we promised our investors?
Yeah.
If we can't hit the return target, we don't do the deal.
Yeah.
Simple as that. And if we like the deal, and if we say, okay, we can make this deal work, we like it. All right, well, this is the offer. This is the maximum we can do.
Yeah.
Take it or leave it. Sorry. I mean, we're not trying to be jerks here, but if it doesn't fit the return target, it doesn't fit the return target. So sometimes a broker, well, the days of the unpriced deal, those ones are pretty much gone at this point. I think across the board for the most part, unless you're talking industrial. But yeah, I think you're right when it comes to reporting data in terms of to like LoopNet or Crexi or one of these sources. I mean, I never report any data. I get these guys calling me all the time. They'll say, oh, so I see you sold your property. What did you sell it for? I go, I'm not telling you. Why would I tell you for? It's like, all you're going to do is put the number in there. The city comes in, looks at the number, and then goes gets the next guy for taxes. I don't want to be responsible for that.
Yeah.
No, I don't know. I sold it for $1. That's what I tell them. But that's why I don't tell anything. No, I was going to say, that's why I don't tell LoopNet or any of those guys anything about any deals that I do. I just don't.
Yeah. So tell me about kind of like the structure. So you mentioned earlier that you basically created this fund. So is that the Bulletproof Cashflow Fund? Is that the name of the fund, or is there another name for the
no,
fund?
No, it's called the Fortress Fund.
Fortress Fund. Okay.
Yeah, the Fortress Fund is set up with we have some other two other good friends of ours. There are a couple out of New Jersey, Danny and Christine Bellish, and along with Danny and Christine, we set up this fund to go and acquire these net lease assets. So yeah.
Okay, and then you're seeking out accredited investors, and then
they could be accredited or not accredited. It's a blind, and it's a blind pool, like I said before. So for those folks who don't know what a blind pool is, that means you will know we're buying net lease, we're buying in these types of areas, we're buying these types of assets, we're buying with these types of returns. You have a profile of what the deal might look like individually. Right, but we don't have the actual deal nailed down yet. Right, but in the world of net lease, it's different than multifamily. It just is, because typically we buy it and we cash flow it. That's it. We don't really do much. So to an investor, it doesn't really matter. It's like if I put an X, I get Y. Yeah, basically that's it. The cool thing about it is that we usually, like I said earlier, we might buy 10, 15, 20 of these locations in a single fund. Now, even though these things are very low risk to begin with, let's say we have 20 of these stores, and in year 2 of the fund, Dollar General decides they're going to close up the store and move somewhere else. Okay, great. Well, if there's any lease term on that store, it'll still keep paying. And then we just have to put another person, another company in that location. No big deal, because we planned for that. But all the other ones are still cash flowing. Yeah. Right. Okay. So it's very different than like say a multifamily where, that means it's a whole different type of asset clearly, but it's like when you purchase that as a fund, you're building in some redundancy in terms of the units that are in there. And the cool thing about what we're building is that
instead of having just a syndication, for example, where they say we're going to take this property, we're going to renovate it, we're going to do all that, and it's going to take 3 to 5 years. You're coming in and say, we're going to buy these kinds of assets. They're net lease. We're going to commercial real estate. We're going to go after these types of tenants, And then this is the target. Our target returns for the fund is going to be this much, and this is our strategy for acquiring these deals and then bringing them online and stuff like that. So is that right? Yeah,
that's it. Pretty straightforward, right? The cool thing about it is that yes, it is a risk-adjusted return. Okay, it's not the same as a multifamily.
Yeah.
However, it's a monthly distribution. You can plan just down to the day when the check comes in. I mean, that's the cool thing. It's very, very, very predictable. Very predictable. That's the cool thing about it. So you're trading some predictability for some juice.
Yeah.
And you know what? And that's okay. And in uncertain times, like we're in right now, sometimes you want to have some predictability. I'm not saying don't buy multifamily. I'm not saying don't buy development or don't buy industrial or don't buy whatever. All I'm saying is that if you had a nice baseline of cash coming in every single month that you know is going to be there no matter what happens, the whole world could end, that check still comes to you.
Yeah.
Unless your bank falls apart. That's another story.
People want to retire and then they said they have all this pool of money and they say, well, I need to have cash flow now.
Yeah.
And then so sometimes it's hard to invest in apartment building. All of a sudden you have to find an apartment building and you never had any experience in real estate. At least with your fund, they can just say, okay, well, I'm going to give you, $500,000. How much, what's the return on that? And then every month you're getting a check. So there you go. You have your passive income right there. And then,
hey, listen, it's a 7 to 10%. It's not bad. It depends on, well, that really isn't the tendency. That's usually what it is, somewhere in that range. So
around 7 or 8%. Yeah, that's
7 to 10. Yeah, 7 to 10.
That's pretty solid.
Yeah. So, it really is a good, solid deal for someone that just wants to have good monthly passive income. So it's not quarterly. It isn't like you do capital calls or anything else like that. It's different setup, So yeah, it really is a great deal. That's why we set it up for. That's why we did it. Right now, our primary focus is development and the net lease business, and of course the education business too, which is a big part of what we're doing too.
Yeah, let's talk about that. This was the other component I wanted to talk about, touch on, was your education component. So what does that include? What is the goal of the education component? Because with Fortress, I can just give you the money and you give me 8% a year, and then I don't have to worry about it. I don't need to be educated on how to cash a check, do I? But
well, unless your bank.
What about the education? What are you teaching them to do what you're doing?
Basically, well, there's two things to do here, right? Mm-hmm. My goal is to get people into real estate. Yeah. And I remember when I first started a long time ago, the thought of doing $100 million deal would scare the hell out of me, right? Nowadays, it's like it's fine. I could do $100 million deal. I get excited about $100 million deals, right? Thing is that for someone just starting out, they don't know where to go. They don't know how to start. I was talking to a gentleman today, a friend of mine, and his cousin calls him up saying, "Hey, can you invest in my deal?" And he said, send over a balance sheet, send over some financials. Well, like what? What does that look like? He had no idea, right? So there's people that say want to get into the real estate game and don't know where to start. Like they're at zero, right? I want to help those people get in too, right? So we have several programs that help people get into the game to really, first off, just get in and acquire the asset. Yeah. We help those people find a way to first start living for free. Living for free in their home, right? Which is great. If you could do that, you pocket that money, you save it up, great. And then what do? You start going and scaling bigger, right? That's what you do, right? I'm even happy doing that. We have that program. We also have another program that shows people how to syndicate, how to raise money, how to speak to people, how to go meet brokers, how to do all that fun stuff, right? How to source deals, how to build credibility, the whole 9 yards. We have that program too. But you know what? For many people, hey, listen, I just want to buy a fourplex. Can you show me how to buy a fourplex? I will show you how to buy a fourplex. No problem. And it's a great time to start doing it. Now's the time to do it. Don't let the media scare you. Don't let the news scare you. Don't let any of these people freak you out. Yeah. Don't let it happen. They get paid. Those companies get paid to freak you out.
Well, the news is really an entertainment program now, and they have to make advertising money. So fear is something that is really is paying off for them.
But you know what though? That's the thing. That fear,
Yeah.
right? It's a primal aspect
Yeah.
of us as humans. People seem to forget that the baseline of what a human is, we're still just animals. We have the same response patterns as a normal animal does because that's what we are. There's a evolutionary mismatch between the human animal and the technology that we have today.
Yeah.
Total mismatch, right? So that's why when we're talking to the green room about like how many more podcasts you need to listen to before you do this business.
Exactly.
How many more courses do you need to, how many more books do you need to read by Robert Kiyosaki or whoever before you do the deal, right? And the thing is though, is that our brains are designed to keep us safe.
Yeah.
That's what they're built to do, right? So if you think that listening to this webinar is going to get you closer to that goal, it's like you're fooling yourself because your brain is telling you, oh no, you're getting closer to your goal because you're listening to this podcast. No, wrong. The only way to do it is to take action. You got to take action, and we have ways of getting people into the take action in our deals anyway, in our programs to help them get in. It's very, very safe, very easy to do. And it's very self-explanatory, but I mean, obviously we walk them through the step, step by step, we walk them through and how to get into a deal.
Sounds excellent. So Agostino, so you have, let's kind of about to wrap up here. So if they want to know more about the Fortress Fund, where do they find that information?
So if they go to just bulletproofcashflow.com, there's information there about the fund, about the various other programs that we have too.
Bulletproof Cashflow, right?
That's it. That's it.
Bulletproof Cashflow. So you're going to see the Fortress Fund in there. And then the education program is there as well. It's easily accessible from there as well.
Yes.
Okay, great. If people want to follow you on social media or how they want to reach out to you in any way, what's the best way to do that?
Just look me up, Agostino Pintus. I'm all over the place. I'm on LinkedIn and Instagram and even on TikTok. I don't do any dances though, so I don't want to disappoint anybody. But don't look for me doing any dances. I just deliver good quality information to people to help them build success in this business. I think it's worth more than doing a crazy dance, don't you think?
Yeah, I don't do crazy dance on TikTok either. But yeah, so it's very good. Well, Agostino, anything else you want to add before we wrap it up?
No, that's it. I think that I think now more than ever, you have to get into the real estate game. If you're not already, you have to do it. There's opportunity out there right now, and we're at a place as a nation that inflation is going crazy. The value of the dollar is going to zero. It's going to happen. I don't know if it's going to happen in our lifetime, but it will happen. Protect yourself with real estate. That's probably the best advice I can give.
Excellent. Well, thank you.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.